maintained its record easing monetary policy as expected, but downgraded its outlook for exports. The central bank raised its view on capital expenditure and industrial production. Now, this signals optimism in domestic demand ahead of the April 1st sales increase. Capital expenditure increased 0.8% in the final 3 months of last year. This was the third consecutive quarter of growth. The BOJ said an improvement in corporate profits is actually boosting business investment. It still believes economic growth and consumer price increases remain on track. However, Monday's data shows the country's economic recovery remains fragile. Japan posted a record current account deficit in January. GDP for the fourth quarter was also revised down. The US dollar moved a little in early trading ahead of the two-day meeting, but it slipped back against the yen after the announcement. Now, in recent days, investors have been choosing the yen due to concerns over Chinese growth and the deepening conflict in Ukraine. A chief economist at RBS Securities said, "It is not an atmosphere where the BOJ will ease immediately, even if it downgrades growth forecasts, as core consumer prices have been hovering in a range higher than previously expected." If the yen appreciates sharply and share prices plunge due to geopolitical risks, including the Ukraine, the BOJ will have to move. Peter Kinsella, a currency strategist at Commerzbank, also shared his views on the yen, saying, "Dollar-yen has been in a range between 101 to 104 yen for much of this year, and the yen needs a fresh trigger for the next leg of weakness. That could come from a steady deterioration in Japan's trade and current account deficits." Well, viewers, that's it for right now, but make sure you join me again later when I will be looking at Mark Carney's appearance before the Treasury Select Committee in an exclusive interview. See you then.